please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Just about 30 seconds left for pre-open. The Hang Seng is up 510 points. That's of course the first trading day for Hong Kong market, so reacting quite positively over there. Shanghai market as well, up about 1%. Nikkei is closed today, so that's why it's showing you unchanged. That market, I think, is not open today also, so they're having an extended New Year break. For our own market, we are expecting a decent start. The SGX Nifty is indicating a bit of a positive start, a bit of a gap up. So let's see if that actually pans out. What are the first rates which are showing on the screen? The currency market has had a decent start, in fact, on a flat note. But if you look at the equity market, there is a bit of a positive start that you're seeing right now on a couple of names. But the volumes are still quite low in pre-open. These are, of course, bids. But Tata Motors, for example, is up about 2.5%. Some of the stocks which fell yesterday, the Tata Motors, HDFC, Reliance, Infosys, TCS, they are the ones which are again leading this bounce. So let's see if that sustains or not. For now, of course, we'll wait for some more clarity on these rates.
What was the rupee opening? I missed that.
It's on the futures NSE. It's opened at 63.84, which is flat, and on the spot also 63.67. So
that's
absolutely
not good
flat.
news.
But
I mean, I hope it doesn't. Yeah, no. But strengthening of the rupee beyond 63.50 is like extremely uncomfortable news for a lot of Indian companies.
Yeah.
It's not positive at all.
Just want to point out a couple of ADAG names once again. Reliance Power, Reliance Naval. I mean, yesterday they were in a completely different orbit altogether. Reliance Naval, after it was up 25%, then it slipped off to be up 18%, and then ended 40% higher. And today in pre-open, it's up about 10%. So it's a completely different market out there right now. Reliance Power as well up 10%. Reliance Communications, by the way, is in F&O ban now. So let's see. Udin Mukherjee is also with us. Udin, good morning. First of all, Happy New Year to you. What would be your key New Year resolution this year?
Happy New Year to all of you and all viewers. Well, I don't make resolutions, but I think I read that Samir Arora yesterday struck a little bit of note of caution with you guys,
Yes.
and I think it's good to take that on board as we start 2018. Samir is generally bullish, and very rarely in the last so many years have I heard him talk cautiously, but I think it would be good for viewers to take that bit of caution on board. I'm quite cautious right now about the market, Anuj, as we start the year. That doesn't mean that the Nifty cannot run on further from here, but I think there's enough blowing in the wind to make us take pause and not get carried away from the successes of 2017.
You know, you're the 8th guy I've counted, Udain, who is cautious on the market. We had 4 mutual fund managers at the end of the year, Nilesh, Naren, Munot and Manish Gunwani. All 4 of them were extremely cautious. And then you heard Samir and you heard Prakash just a little while ago.
That's a great sign, by the way, Latha. That's a great sign.
That's exactly so. When so many people are cautious.
That's the most bullish thing that you can...
That is exactly what I was asking you. That's exactly what I'm saying. You know, there's so much caution in the air that do you think we are going to keep climbing?
It's entirely possible, Latha, that this happens, that we keep talking about caution and the market grinds on to 11,000, which is why I also added that bit that the markets can run on some more. But, you know, everything is mean reverting, and I think the big theme for 2018, as I discussed last time, is probably the mean reversion of volatility as well. We've just got so used to 12 months of no volatility that we think that will continue indefinitely. And while our words of caution may fall on deaf ears for the market, I think this call on volatility might well come through because we've just not had it for far too long, and something will probably trigger volatility in the market once again. There are enough straws floating in the wind. We may disregard it right now because that's what happens in the throes of momentum. But I suspect that in the first quarter itself, Jan, Feb, March, it would surprise me. It may not happen, but it would surprise me very much if we did not get at least an 8-9% correction once in this market.
Oh, okay. Then hi, good morning, Happy New Year. So what is the tallest straw floating in the wind right now? What makes you most cautious?
You know, this whole, I mean, I think you'll have to come back to the bond market because, you know, this combination of the macro factors which probably is leading to some discomfort in the bond market, will probably trickle down to the stock market at some point. Now, what form and shape it takes, we don't know. I mean, it could easily be through something else, that the fiscal deficit has gone out of whack, and the government, to repair that, partly does something with the capital gains tax. So it might be a different route, but I think the genesis of it will be the slightly tattered macro picture, or worse macro picture, that we're entering 2018 with. Now, whether it happens through bonds, whether it happens through the bank nifty because of the pressures that are building up, whether it happens with a defensive measure or a preemptive measure from the government, like touching the capital gains tax, that is difficult to predict. But I think the combination of circumstances with a macro might actually be something which the stock market takes note of sooner than later. The other point, Sonia, is that to note is that this year is the year of the litmus test for earnings, because the market has already taken multiples to a point where it's saying we've priced in earnings growth. Forget about expecting and hoping. It is in the price right now. So if in the next 4 quarters of 2018 we don't get growth coming back, we have a problem on our hands. And the problem is because both the fiscal and monetary bullets have now been spent. The government has no money to spend, and the Reserve Bank of India has no elbow room for interest rates. So we now have to hope that growth comes back, because if it does not, the medicines have all been given to the patient.
Okay. Then a word on the big rally in ADAG. Of course, it's been driven by Reliance Communication and selling those assets to Reliance Jio, but phenomenal move in some of these names.
Yeah, you know, ordinarily, Anuj, I would have said that that is not a promoter group you want to back, but you know, it's the new year. I think everybody in life deserves a second chance, and so does Anil Ambani. So let's see what he does this time around. I hope life has taught him the difference between showbiz and biz. So this time maybe he may want to do things a little differently, otherwise he'll just end up like Vijay Mallya next time around. Maybe his surname has saved him this time. So I'm keeping my fingers crossed and hoping that he will probably get something right with the new businesses he's attempting. There are rumors about new partners he might get. He will do well to do that. But this is his last chance. If he messes this one up, there will be no second chances. The market's betting on it. I think there are a lot of traders flocking to ADAG stocks right now. Would I bet on it? Probably not. There are better promoters in India to back. But as I said, you know, everybody deserves a second chance.
Yeah, you know, actually the froth in the mid-cap rally is most in the leveraged stocks. Everybody who's in the NCLT is seeing 20% rallies. I mean, look at Castex, Jaiswal Nico, Videocon Industries. I'm counting the top 4-5 gainers at the moment, Metallist Forging, in the mid-cap 100. All of them are up between 5 and 7%, and they're all in the NCLT. It's not that easy to buy them up. And the PSU bank stocks who actually own them are not doing all that well. So do you think the blow-up will come here, Udayan, in the mid-cap, especially in the leveraged stocks?
You know, I can understand the temptation, Latha, of buying these stocks, because some of them probably will go on to get a reasonable resolution with maybe a good buyer picking them up. And, you know, in 2 or 3 of them, you may end up making a lot of money. But, you know, it's like the classic tail wagging the dog right now. I mean, the leader of the rally for the last, not just 1 year, but the last 2 or 3 years, the bank nifty, is showing distinct signs of softness. You know, this aura around the recovery or resurgence in PSU banks is beginning to wear off a little bit. The last few days, the price action of the bank nifty has not also been great. Now, if you tell me that the bank nifty starts to flag, but some of these small caps are now going to lead the rally, and one would have to be terribly worried for the health of the market. But, you know, these things are very difficult to time, Latha. You could have drawn a line on RCOM 30% lower, saying you got a great rally exit, and the stock goes up 30% more. So some of these will go on to rally so much that it's difficult to time the exit. But I suspect we are getting to a point where there is, as you said, visible froth in the market, and that should always be a little bit of an alarm bell.
The pre-open rates have now settled 42 points higher on the Nifty, which is what The SGX was also indicating 10,477. The problem for the market has been for some time, since July actually, the Bank Nifty not done anything, and the mid-cap should do well, so 5:1 advanced decline. Reliance Naval up 7% and TVS Motor up about 2.5%. Ashwini, thoughts on pre-open? What would be your first trade? You said that you may want to try a short trade. Would you stand by that and your 9-10 call?
Yeah, first up, if you get this sort of a gap up, you should try to take shorts and see what happens. I think for the 9-10 call, maybe you want to still go short, and then SBI with a stop say around 311 and target of 297.
Okay, that's the 9-10 call. We still have about 5 minutes more to go. Udayan, I just wanted to come back to that point you were making about the possibility of the LTCG being tinkered around this time in the budget. If that does happen, are we staring at a deep correction at all? Because, you know, we all know that the exchequer is in perpetual need of funds, and the market also believes that this move is bound to happen at some point in time. Do you think it could lead to a big correction?
You know, every budget, as you know, Sonia, this kite is flown and it does not happen, and the day after the budget or the day of the budget there's a relief rally because LTCG did not come through this time. So I don't know whether this is one more of those years, but the compulsions for the government are higher this time around because clearly they've spent a lot more in advance trying to help the economy on its way up. Well, we'll see with time whether the economy has got that help, but I think the government is desperate for funds right now, clearly. More so with the kind of numbers that we are getting on the GST collections front every month. So they need money from somewhere. They might touch capital gains this time around, but who's to say whether this will be the time that we'll get unlucky. If it happens, it might be the trigger for this correction, which is overdue. Will it break the trend? I doubt it seriously, because I think capital gains will also be absorbed. It will dent sentiment severely for maybe some time, but I don't think it is something which will break the markets back. But it will usher in a bit of a mood check, and that may not be such a bad thing for the market given the current backdrop. I think there is too little disappointment priced in at this point at 10,500 Nifty.
But there is also a lot of caution from you know, people like you and the fund managers I alluded to. Now I'll tell you where I'm coming from. You know, the crude prices are rising. Today it is 67.
Before you finish that question, Latha, can I just interject for the first sentence of your question, which is that commentary is one thing, positioning is quite another. There is caution in the commentary, there is no caution in the positioning. You look at the same guys who've been telling you they're cautious. I think the net inflow into the stock market from these guys would be a few thousand crores. So it is not that they have not been putting money into the market because they're getting money, but they're telling you that they're feeling cautious at this point in time. I think the more important thing is what is the price on the screen telling you and what is the positioning in terms of money telling you, and both of them I think are far from cautious at this point in time. The commentary maybe.
No, fair point. Valuations are definitely not indicating caution. I mean, I take your point entirely. But what I'm saying is the caution is coming because crude is at 67 now. It's a fresh 2.5-year high. All the central banks are going to start rolling back their liquidity. Some already have, and the Indian bond yields are also rising. But all this is coming because of growth, because of demand. This is something of a similar combination we saw from 2003 to 2007. So, you know, maybe is this growth supporting, you know, the markets?
Expectations of growth certainly is, Latha. So far we haven't got much by way of delivered growth or recorded growth. But, you know, it is an expectation, and the market may well be right. I mean, you're right in pointing out that while we are worrying about valuations and all these points of concern, the market is very sanguine that in 2008 growth will not disappoint. And when we get growth, the market may not go up so much. I mean, it often happens that the prices factor in growth before it comes, and then when growth comes in, the markets level out. That is certainly an outcome for 2018. I won't dispute that the market has a flattish kind of year because it already priced in the growth. But in the event, even if it's unlikely, it's all a game of probability. We can't take it for sure that growth will happen this year because we've gone wrong the last 3 years predicting it. So in case it doesn't happen, I think these valuations will begin to pinch a little bit because there is just no room for disappointment out there.
Okay. Well, at the moment, stock markets are starting with about 1/3% in terms of gains. Very quickly, Prakash, we've got only 50 seconds for the markets to open. Auto and ANKs, considering that the auto numbers came good?
Oh yeah, I think that would continue.
No discomfort with any of those?
No, because there's always this balance between domestic and exports for quite a few of the larger players, whether it's Motherson Sumi, Bharat Forge, Subros. I mean, Subros, of course, is more domestic, but selectively you have to continue looking at auto hands. And I'm waiting for a dip, if you had in that space, there's nothing wrong in terms of the secular long-term story. So as Udayan said, the positioning is still very positive because they're compelling opportunities there. But not at all worrisome at this point.
Many of them service both the European markets, some the North American markets, yes, and the Indian markets. And here, at least in the auto space, the growth is being delivered. The numbers are there. Prakash, thank you very much for joining us on the first day of 2018 when we are chatting with you. Have a great 2018 yourself.